Hello, welcome to Velvet City. Let's talk about ICT OTE model. OTE simply means optimal trade entry. So let's hop into the chart and make this happen. So before that, we'll have some rules here. I'll come back to the rules and then make more sense out of this. So I'll be working with Euro USD. That's the sample I want to use as case study. Okay, or I can use USD card. Let me just use USD card. Yeah, I think I want to use USD card. That's a sample I want to use for this. So obviously I like to use forex.com. I like their data, it's just nice for me. So we'll be interchanging with the rules. So the rules are here. So the first thing you want to do is note higher time frame key levels. This HTF simply means higher time frame key levels such as highs, lows, and FVG. So let's do this together. I want to start from, okay, I can start from the monthly chart, but I have a problem with starting from the monthly chart because I actually use a free version of what's it called, of TradingView. So my free version does not give me enough data on the monthly chart. So, and that's not a problem. That's not a problem. So I'll just hop into the, let me remove every drawing. So I'll hop into the weekly chart. Okay, so right now we are on the weekly chart and I want you to just focus on this weekly chart. So before that, let's check the rule. It says note higher time frame key levels such as highs, lows, and um, FVGs. FVGs are fair value gaps. Now, what are higher time frame key levels, which you've seen as high, lows, and all that? So let's go ahead and take note of that. So on this higher time frame, this is my weekly chart, and I have various high and lows, and then I also have fair value gaps. Now you want to ask which particular fair value gap do I need to identify. So I will use my array, not my horizontal line. So this is a key level, is a high. I've taken note of that high. I just want to clip it so that it doesn't go out. Another array. Now this high and this high are relatively the same, so I'm just going to mark only this one and leave. And also this, all of them are aligned at the same point, so I'm going to mark them and clip it. So another thing I might want to do is maybe use a rectangle and then mark out a space that can kind of align them for me. Yeah, that's what I can do. So I've used a rectangle to identify these various highs. Okay, not just that, there's another high I can see. So please watch this high and these highs with this, they are very very relative to each other. So I've identified all these high. This is not much work, it's quite simple, and definitely over time you get used to it. So let's go for the lows. I think this low is relatively equal to this one, so I'm taking this low. You see why I'm doing this, just a moment. Then also let's go ahead and identify more. Okay, this low and this is also equal, so I'm taking this. Yeah, and then is there any other low here? Okay, now look at something beautiful. This low, this very low, because this low here and this one are relatively, but this very low and this high, or this high align, so I'm taking this. So that's it. Now it doesn't have to be very very perfect, you will see why. Okay, so on the weekly chart I've been able to identify this. So what's the next rule? It says identify higher time frame tone or profile, which is the narrative, and I've talked about narrative in previous video. Check out for the last video. Now narrative helps you about how to trade the Asia model. Narrative is what tells you what's the underlying condition in the marketplace presently or currently. So the narrative of the market right now, what do you think it is from your own view? Now it is clear that we've been bullish for quite a long time. So what's happening? Price, we had an institutional sponsorship here going up, price dropped, went up. Now it dropped to take out this what's it called, this lows. It can happen and everybody here is going to get crushed. Yes, you don't expect to be 100% perfect all the time. So what happened? Price came down here, went up again, then came down here, went up again, came down, and it has been going bullish all the, let's say, for a couple of months or quite a long time right now. So we are in a bullish condition. And from my total analysis, when you compare this to the DXY, you see that DXY is actually going up. So it means that this kind of currency should be going up as well. While foreign currencies like Euro USD, Okay, no, sorry. Yes, Euro USD, exactly. GBP USD, NZD USD should be going down. Yes, check that. I don't take my word for it. Just check that out so that I can see it on your chart. Okay, so I'll give you an instance here, and then we go ahead. I'll give you a whole lot of instance that will help you. So I've identified these key levels. I want you to pay attention to these very key levels that I have identified, and then we've been able to see that the narrative thus far is actually up. It has been bullish for quite a long time. And then let's check the next rule. So the next rule is use your fib. Okay, so we're going to use our fib now because we want to buy at discount. Remember, smart money buys at discount and sell at, okay, premium. Sorry, this is premium. Let me just change this, not equilibrium, and sell at premium. Just a moment. Sort of typographical error. Well, it's not a challenge. So we sell at premium and then buy at discount. So let's go back to that. Okay, so this is my fib. I want to get my fib too, and I want to give you an instance that is just so easy to understand. Okay, so look at this. Now from this price leg, okay, let me just show you this. I want to start from this price leg and show you where it works, and we'll just go through it. You're not going to get a setup every time, but if you get a setup once, man, it's going to be a big one, like a huge one. Okay, so you can see my, what's it called, my fib is not set, and there is a video out here on how you can set your fib, but quickly I'll do it right now. So I'll go to setting. I'll do it quickly, but then for full understanding, just check out for the video on that. So I'm going to click and set for all the levels I want. So I want 0.5 level, yeah, and also want my 25 level. So let me use this as 25, 0.25, 25 level. I also want 0.7. I need 0.62, 0.62. I need 0.75, and I need, okay, 0.79, 0.79. Okay, now ICT what's it called, OTE levels, which is optimal trade entry levels, are 25. Just a moment please, so that let me just fix this so that I don't kind of confuse myself while trying to talk and also do this. Just a moment, I'm almost done. Okay, and here we go. Okay, so that's it. Okay, so I want to reduce this to 1. Okay, and that's it. Okay, so this is just the OTE setting, and I've done that. Please, this is not clear, I know, and if you want more clarity, just simply check out for the video on that, on how to do that. So okay, back to this. So the ICT optimal trade entry levels are the 0.62, that is 62%, 75, 79 percent levels. That's the ICT. This is just taking me time to fix because I'm trying to do this at once, but please check out the video for a full understanding on that. Okay, so what you simply do is you have to identify, we've talked about the rules, how you identify various price levels, and then you identify an intermediate term or a price leg from a low to a high. This is from a low to a high, and we're going to do this over and over again so that I can understand what I'm talking about. Okay, so we've been able to identify from a low to a high. Whenever you are going from a low to a high, that is a bullish run, which means we are in a buy condition, which means going up. Okay, whenever we are going from a high to a low, that is a bearish run. From a low to a high, bullish; high to low, bearish; low to high, bullish. Okay, so I believe you're on the same page right now. So what happened is that we've marked out key levels. So what are we looking at for? We're looking at for price to come into this region of between this and 62% level. That's when we want to buy, because price, remember here 0.5 is equilibrium, anything above it is premium, and anything below 0.5, which is equilibrium, is what? Discounts. And remember the rule, we are buying at what? Discount, not selling at discount, and then we sell at premium. So right now price came to this discount, which is inside, which aligns with what? Which aligns with ICT optimal trade entry zone, which is 0.62, 0.75, 0.79, and just within that area. So what's the next thing we are looking at for? We are also looking at for what? This coming into any of these key levels we have identified. Okay, on the key levels, there is one part I did not identify, which is also FVGs. I'm going to do that just in a couple of minutes. Just give me some time. We're going to definitely do that. So watch what when price came into this place, what happened? After it formed a swing low, so you have to wait for a swing low to form. We have a lesson in this same channel about swing lows. So wait for the formation of a swing low, then you can buy. When you buy, target the nearest high. You don't need to wait for it to get to this high. It might not get to that high or this other one. So what you simply do is at this very point, just simply target the nearest high, like this, or you can break down to lower time frames to frame your target, and then obviously your stop loss should just be here. So because you are accommodating this kind of stop loss, it simply means you have to actually scale off some things here, and then if you are patient enough, you can still wait for very, very long time before it gets to this point. So that's one. I'm taking this off so that I can show you more examples. So you just know this is not a cherry pick, this is just something that happens. So I cannot take a bearish move here because we are not in a sell environment. That is not the narrative. Now you can trade against the narrative and still make profit. I've actually done that, but it's not something I like to do. I like when the odds just aligns with me and they are all in my favor. So that's why I don't like trading against the bias. So for me, I'm not going to trade against the bias. I'm going to use rather from here, from this low to this high, and I'll zoom in so that we can see everything clearly. From this low, I think I want to change this to white because it's kind of conflicting with my week. Okay, exactly. So from this, you see the low I marked, from this low here to this high, that is what? That is the present price leg we are focusing for this. So when we go to this point, what are we looking at for? We're looking at for some key levels, key basic levels. Okay, so right here at this very point, price came down to 62%, 75%, and what, 79. And what happened after the formation of this swing low? Though price came down a little bit to scare you off, but your stop loss is here. It still went up, taking away this high. But then this high is a good target, or this one. You might not necessarily wait for it to get to all this place. Okay, so still on this. I know this is going over your head, and you're like, "Are you sure this?" But let's do more examples, and then I'll still give you the high probability ones whereby virtually everything aligns with what I want to see, and I'm just so comfortable with everything and I want to do it. So now when price is coming down, I'm not looking out for anything bearish, so I have to still wait. This is where patience comes in. You have to wait for your setup to form completely before you execute or push the button. Okay, now look at this. Price went from here to this point. What happened? Immediately it came down to this very point, what's it called, this, and formed the swing low. What happened? We bought expecting it to go high, but they didn't do much of a high, and then came down. Yes, I told you about this kind of situation. So in this kind of condition, you will likely fail or take a losing trade or take a losing trade. Yeah, but what you have to do is that always break down to lower time frames for your TP. Now this is a stop hunt. This is a stop hunt, no problem. So what's the next thing? When price was bearish, I'm not looking out for opportunity. So what are we going to do? I know you don't want to take a loss, and maybe you're like, oh, it doesn't make sense. Why a loss? It happens. Yeah, and it happens. Yes, it happens. Look at this one. This one is a very, very high probability setup. It's so beautiful. Like virtually everything I wanted to see is in this equation. So what do I mean by that? And it doesn't happen every time, but once it happens, it have happened. So let me show you what I mean by that. Now watch. This is a key level, and this key level aligns with this region of, let me show you all the regions I'm looking at for. I'm looking at for everything in this region. So I'm looking at for everything from this region down to this very region. So this is my attention. I want price to get to this place because that's where I have my OTE levels aligned to. So apart from that, I also have this key level now, so which means this low is also, remember these lows are very relative, this is also relative to this. So you see this particular low, remember I took them as relative lows, aligns with that. That is a perfect condition. So what happens, this low aligns to the level I want, this also low, they are relative to each other, they align with that level. One, So what again am I looking at for? Also, I want to look at for the FVG. FVG is fair value gap. Now look at, there's a fair value gap here. So from here to this point, and this is actually what a last fair value gap. Please check out for the lesson on last fair value gap. I know you're wondering why is everything like this and all that. Actually, it takes time. If you want to really master this, you need to put in the hard work required. Require some level of work, not too much, but require some level of work. So this is my fair value gap right now. So you see, I have my fair value gap, I have my old lows. So it does not have to be old lows and high always. So an old low is enough, old high is just enough. So what happened? Price went all the way up from this place in a bullish condition, and then go to this point. We are not buying, we're waiting for it. Now if you take from this point, now let's say you are considering from here this high to, oh, okay, I know what to do, just a moment. If you are considering from this high to this one now, as you can see, when price came to this 50%, it went up. So that means it didn't get to the OTA level. That is why I'm not considering that. So I have to go to this high, and then I like it because price came down to this point. So after the formation of this swing low, right here in this candle, you can participate. And when you participate, what's your target? You are going to target any high on a lower time frame, which means just break down to your daily chart, 4 hours chart, and all that. You see a kind of your take profit level, but whatever target you're looking at for should be able to accommodate this level of risk. Now what do I mean by that? In the sense that at least it should be up to 1:2. So let me see the point where, okay, just a moment, we are going long, so you might likely enter from this candle, and then your stop loss should be around here. Yeah, I know this is forex, the precision is not really that excellent. So if you can be patient enough, you can get 1:2. Let me see. Okay, around here is 1:2, but it took time. So what you simply do is you can buy about 3 or 5 contracts, or 2 contracts or more. Just have more than 1 contract, then you can scale your profit. Once it gets to 50% of this place, like this price range, let me see if this gam box works fine. Okay, I need to edit it, but I can't do that now. So let's say using this, let me use my fib from here to this point. Where is your target? Just take your profit at this point, this 50%. Then after you must have taken your profit at 50%, you can scale it off, and so that's it. And this one worked perfectly fine. So I'm not promising you that you're not going to take a loss from this, but a whole lot of things has to be in play. You have to watch out for so many things. But look at something else right here. Okay, I think at this point, look at something else right here. Remember, you're not going to look at for any bearish run. Any bearish run just have to happen, and you don't have to always be on for every trade. So this is one of the concepts I use for my swing trading, and it has been very, very helpful. The win rate is just so amazing and high. Okay, so let's go to the next price leg, which is from here to here. So look at this low, then look at this high. Yes, exactly, this very high. Yeah, that is our interest. So what happened? Let me remove the things we've done before. Yes, remove. Okay, now watch this particular low here, this one. Now you see we have this aligning at the 70 what at the 75 retracement level, which is a very, very sensitive or key area as regards to this, or what we're talking about. What happened? Price went from this point all the way up, and then price was coming down here. Actually, we can't find anything like a fair value gap on this run, but if you look out for this, you can see an inversion fair value gap overlapping. Now look at something about this particular model. Oftentimes you might not see a fair value gap. Remember, we've talked about fair value gap oftentimes in this community, and please check out for the lessons on fair value gap if you've not. We've talked about fair value gaps oftentimes in this community and a whole lot. So please look at also this low is also a key low that you want to consider. This is a low. Yes, whenever you have a swing low or a swing high, the 3 lows of that candle is very, very necessary. Like this low, and even this low, they are all key levels. Watch the way price behave around them. You see how price struggled around this place, then came back here and went up again. So same thing happens here. I know this is going to be very confusing at first, but over time it's going to make sense to you. So what happened? Price came down to this very point, formed the swing low, right? Immediately you form the swing low, you're going to be a buyer here. Your stop loss is here. Quite a huge one to consider. But what you simply do is immediately price starts going up, please start trailing your stop loss immediately. Just start trailing your stop loss. So once price starts going up, like very, very beautifully up, just start trailing your stop loss, so that at least come to break even, so I don't have anything to lose. And that's just it on a big time frame. I know you might be wondering, oh, this thing looks quite complicated or complex. So I'm going to remove everything, and then we'll break down to a daily chart. So this is a daily chart, and I don't want to go back to hindsight again. I want to come to the present price leg. Now look at the present price leg. If you look at this now, from this low up until this high, there's never been any retracement to what's it called, down to the optimal trade entry to give us a buy. Same thing is happening here. So what do? We simply break down to 4 hours. So this is how you navigate in various time frames to make sure you are aligned. So now we're on 4 hours time frame. I think I'll still do another lesson on this because this is not as easy as you think. You just need to put in some level of work, and then hopefully it makes sense. So from here to here is a beautiful leg for buy. So we are considering from this point to this point, and then what do we need to do at this very point? We need to identify key levels. Remember, higher time frame is the period between monthly, weekly, daily, and your 4 hours. So what are the key areas now? So I'm going to take note of all these lows here. This low and this low, they are relative. I'm taking note of this is a low. Let me clip it. I can decide to also change it so that it can be very visible. Okay, yeah, so I've taken note of that low. What's the next point? This low and this low, they are all relative. I'm also taking note of it. Relative equal lows. Let's go back and see if there are more lows you can take. Okay, so this, I think these levels are okay. Also, let's take note of this high. In fact, this high might be a very good point for profit taking. So which means if you enter here, you should be looking at scaling your profit at this point, because what happens is that old lows and highs usually invert to either turn to a support and resistance level. And mind you, we don't treat support and resistance the way retail traders treat it. So we treat it with concept, narrative, and by reading what price is happening. Remember, we're not using indicators. We're not trying to use any gimmick or any hack or kind of shortcuts. We're actually reading price and using the right logic when reading price. Okay, so now after that, you have this very big fair value gap, here. Look at it. So what happened from this very point up until that value gap? You understand? So it's very, very big. You might want to consider it. So okay, yeah, but this value gap, if you watch, entered entered equilibrium or premium. So I'm not going to consider this value gap when it's in premium or this. So I'm going to wait for it to come down to this optimal trade entry level, and then before I can buy. So once it forms this swing low, I'm already on this trade. No matter this, it's not going to affect me, and then I'm here. If you should enter at this very point or this candle, and then you are going up here, I think you should be able to get 1:2 long. So after this swing low, let's say you enter here, keep your stop loss right here, and then we're going up. Oh, we get exactly. So let's see 1:2 around here, which is beautiful. So but then you take your first profit here, scale it off here, and then you see how price dropped before continuing on the upside. But this is your maximum target, the high of the price leg. So that's it for that one. Okay, so I can also give you another format you can use for this. So let me clean everything. It's just very simple. Let's go back to the daily chart. I'll show you a format I can also use. Now if you want to incorporate this with section, now let me remind you, this video is not going to cover everything that has to do with this lesson. So this might be the last instance I will give, and after that we'll consider making more lessons on this. So for this now, I've marked out 3 basic days. So I'm going to break down to 15-minute chart intraday, and then now one thing I like about this intraday is going to give me the ability to mark out various trade sections, because you might not be in front of your computer every time looking out for when this thing is going to form. But if you are working with trade sections, it's going to be very, very helpful for you. And what do I mean by that? If you know the London section, the New York section, and all that. So for the present day, okay, I want to start from this very day. So I can start from this very day, and then you already know that the narrative is bullish. We've actually identified that. You know the narrative already. So whenever you see a bullish run from here to here, so let's mark again. This will always happen. So let's mark from here to here. Let's go down. So this is our OTE level, which is 62, 75, and 79. And then what this OTE level now aligns with what? These old lows here. Please, these old lows and high, this is 15 minutes, mind you. So go back to your daily chart. Please go back to your daily chart and identify all these old lows and high we are talking about right now. Okay, so that's it. Now when we talk about from the daily chart, we want to talk about old lows and old highs. They are very simple. You see, previous day low, previous day high, very necessary. Note all those areas. So we are noting previous day low. We are also going to note previous day highs. These are very, very sensitive areas. So based on the time frame, I don't know if you get, I'll have to work with it. So but then if this one is confusing to you, let me give you another instance. All these lows should be noted whenever price is going to be dealing with this region or this. But now we are more like in an all-time high. If you look at the daily chart, or for quite a long time, it's been long price. That's why we don't have any much information to grasp or hold on to. But then identify daily high and daily lows just for some of them. But if you don't have enough information here, just go down to the 4-hour time frame. 4-hour time frame can be very, very helpful. You can find some things here. Now watch. This high and this high are relative, and you see how they make sense. Now this low and this low are relative. You see how they also make sense. Okay, now this high and this high for this bar, they are also relative and they make sense. Okay, you can also identify more. Now what happens is that at first this might be confusing to you, but you need your time to get, like say, adapted to this whole idea of moving from various higher time frame or whatever. Now I'm not talking a whole lot about fair value gap, because most of the concepts I've been dealing with on this community talks about fair value gaps, and they are easy to use. Fair value gap concepts are very easy to use, just like this also high and lows are very, very easy to use. They are very sensitive parts or very sensitive areas where price will definitely come back to, revisit or react from. So from here you see that at these very points we had a very, very, will I say, kind of price drawing down to this place, which makes sense to us. Okay, so within this region, you see this line, it means that price has a business to do with this place. And then from the OTE, so what are we looking for to align? OTE has to align key levels such as the high, the lows, and or the fair value gap has to align. And also what again need to align, we also make sure we're in order with the narrative, which is the profile or tone of the market. So let me show you something here. While we are talking about this, look at the last value gap. Okay, sorry, just a moment. Oh, I'm sorry for that. So what happened is that we have, actually, is the Hamatan season right here, and it comes with a whole lot of dust. It's not something I'm comfortable with, but it's all good. I got to get used to it because I'm an African and it's fine. So just right here, this is the last value gap, and we've talked about last value gap severally in this community, so check out for the video on last value gap concept. What happened? Price came down to the last value gap 1, which means it's a key level, and also price, what again did price did? So remember, this is the first time, the very first time price came down to this last value gap and then to this very point. What happened is also a good entry. After the swing low, we do what? We can buy going upward. It didn't get to this point, so that's why you have to scale up your profit, and also remember to move, what is it called, always remember to move your stop loss, like trail it, so that you don't get hurt by some of these things once price start going up. Okay, that's one. So this was an entry opportunity, but then price still came back here, retesting this level again, and then coming deep into this value gap. And why do you have to trust this and not be afraid about entering again? This particular price did not violate this value gap. Look at this value gap. This value gap, look at the mean threshold here. Yes, the bodies were there, but did you see anybody outside the value gap? Remember, the bodies tell the narrative while the wicks do the damage. So this wick coming out of this value gap, but not anybody leaving this value gap, makes sense. So it means this value gap is very, very much active. So that's why price might be telling you a story or an information using a high, a low, a value gap. You just need to be able to identify what price is saying per time. So what happened when price came back here? and then you must have taken some profit here. Before you know it, you're out of the trade. No problem. When it came back here, you have to observe, did it violate this particular, what's it called, fair value gap? No. So most likely you might be afraid of entering here, but this is a good entry. Even coming down all the way here, no harm. But then if you still enter at this point when you form the swing goal, no problem, your stop loss is here, and then you target the high of this point. And this is an intraday, so it's not really going to hurt you as much. Okay, so what's the next thing? Let's check for another day. So this is a bearish run. I can't consider it. Understand? And I will tell you how to use bearish run in subsequent videos. So I can still, from here to here, watch this. This is just happening always. From here to here, you can use this very point anyway. Watch. You see how price got to the 62% level and still went up. If you had also considered this very point, beautiful. And let's check for another opportunity. From this very point all the way to this very point, price just tapped at this 62 level, and what happened? It started going up. So another thing is, maybe you're not really okay, or you're not seeing enough opportunities here. I advise you to use the 5-minute chart. You always see entries. Now look at this. I want to show you something here. So from this very point to this very point, so let's see, that is a present price action. An opportunity would have maximized. So watch from here to here. I'm always looking for only bullish. So watch from here to here, this point. Now what's making sense to me here now? I don't like to identify key levels from lower time frame, but let me just show you if you still want to use that concept. So what this sensitive area 1, and also what again? Fair value gaps. The fair value gap is here. No, so immediately price came in here, you're targeting here. So what I will simply do if I want to take this kind of trade, immediately price is coming down to this particular fair value gap and also this high. I'm using on my higher time frame. What I'll simply do, I'll have to execute from the 1 minute. That's what I'll simply do. Yes, I'll execute from the 1 minute chart. So I will now look for a shift in market structure. So where can we identify a shift in market structure right now? So this is not a shift in market structure. So up until, okay, here, yeah, from here, let's see. This was where we had a shift in market structure right here, and then price coming back into this place to retest this before going up. So I think I want to enter here at this very point. If it's not clear, use the 3 minutes. So what am I trying to do is that I don't want to make analysis from a particular time frame or frame the idea from that time frame and then still execute there, so that I can be able to what? I can be able to mitigate my risk and, you know, improve or increase my reward. And that is just what you're trying to do. So this is the OTE model. I'm going to build more on this, and this is very ideal for forex trading. It works for virtually all the pairs in foreign exchange, whether your crosses, your exotic, or your major pairs. So that's just it, and I want you to join us next time. And please help me do something. Do like, comment, and subscribe. We're going to give you valuable content as much as possible. Thank you so much for showing up.